Okay, just doing the morning check for the markets. I've got Ethereum open, I've got BTC open, and I'm going to give a quick analysis for the morning. Of course, the weeklies, not much has changed. We still got this big bear pattern, this big M forming, or it's formed already. Big M's are bearish. Let me change the color to red since this M here, M is bearish, and then this M as well is bearish, and it's broken that. And now you can see it's testing and playing along the underside of this M, which is essentially a bearish retest to then come down. Now, if it breaks out and puts in a W shape, obviously that means it could retrace. And where would it retrace to? Well, it would probably retrace a normal amount to retrace is the other Fibonacci numbers and the Gann numbers. So let me just change that to black and white. You can see the magic number to retrace according to Gann is right here at the 50% level. So if we were to retrace, we would be going up to around 10,000. We could also retrace off a smaller range, like retrace over here, depending on how strong the move is or how weak the move is. So we could go up to 8,400 as a retrace, but again, that's only if it puts in a W pattern over here. So let me clear all drawing tools again, remove drawing tools. Okay, so that's what we've got for the moment. The bear, that's the bullish scenario if we go up and we form a W, but if we form an M here, then a realistic target is a resolution of this range. And again, we're on the weekly here, so not much has changed. So we've already hit the 61.8. We've gone way past the 50%. You can see right here at the 50%, we had this big battle and we bounced off the 50% and we made a retracement, right? But now we're coming up to this 61.8, which we're fighting over now, and the 70.2, which we tagged, but we haven't really resolved, and the 78.6 area down around 5,000, which is a potential turnaround area. So that's for the weekly, both the bullish and bearish, depending on the structure that comes in. Now let's look at the daily to see where we're at. So on the daily, it really looks bad because we've got this M that's formed here. Okay, so we've got an M that has formed on the underside. Let me turn off the magnet tool. On the underside of another M. So remember that big M that we showed? It's basically this M. Boom, 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 boom. And we've got this underside of that M. So what generally happens in bear markets is that it will come back and test the underside of the M. And then we will see if it puts in another M. So it's put in another M here. And that makes me think that it's very bearish. Okay, so we've got this M sign here. And right over here, that's the break line. So you can see we have already broken, but we've come back up above it. So here's the underside of that M, which is what we're testing right now. As you can see, we're battling around this area. Okay, so again, it depends on where the battle goes, because I think we're consolidating right now. So there's two potential scenarios, and I've got to drill down to the 4 hour in order to see those scenarios. Okay, now there is there's the trending scenario and the ranging scenario. So let's talk about both of those right now. Let's say this is bullish and we're going to put in a double bottom. Well, what that would mean is we come down to this area over here and we put in a W right over here. Come down, we put in a W here, and away we go, right? That would be semi-bullish, and what that would paint is a big head and shoulders pattern that could potentially take us up to that 8,500 level, right? Remember that on the weekly, you could see that was a version of a retracement. You see here, it comes up to the 50% level. That would be a bullish head and shoulders pattern. And of course, that would still lead to a downturn. I don't think there's much that we can do about the downturn. It's got to come. Okay, so that's the bearish, so that's the bullish scenario. So let's clean that up. Well, that's the bullish scenario. This is also a potential head and shoulders pattern that is coming in. So if it does break down here and does come into the 61.8 around here, then we've still got a bearish inverse head and shoulders pattern. No, this is a normal head and shoulders, inverse is bullish. So normal head and shoulders pattern, which is essentially bearish, and then we'll have to see what happens around here. So if it just consolidates and breaks down, then I'm worried it will break and break and break. If it consolidates and puts in W's, then I will potentially be looking for it to come back up. So those are some of the things that I'm looking at the moment. Again, we're in no man's land here, sort of thing, but the overall picture is bearish because we've got this M here, we're testing it, we've got a potential M coming in here, but it's not confirmed yet. It has to break through this level. So overall, pretty bearish on Bitcoin. Now let's look at Ethereum on the weekly, because Ethereum looks a lot better, and that actually makes me happier about Bitcoin. So Ethereum, if we do a Fibonacci right here, you can see on the entire range we're well below 78.6 here, right? So we're well below the bullish location, right? So we're looking to buy anyway. Now, even on this smaller range here, sorry, no, I'm going to change that. On this range here, even in that range, we are below the 78.6 right now, right? So that's the bullish area where you want to buy, and we're below it, right? We've also got and we're so low on the chart that I have to move this. We've also got a W working here in price. As you can see, it's broken above here. So we've got a W working, and now all we're doing is coming down to test this side of the W, right? So we're testing it here. So it really depends on what happens in this area. So let's break it down, because that's the daily. So we know that that's the weekly. So we know on the weekly it's potentially got bullish setups coming in. And now this is why I'm enjoying Ethereum at the moment. We've got what is called a divergence. So let's see if I can change the color of that. Yeah, we've got a divergence there, which means that price made a lower low, but momentum made a higher high. Now, it's not the same with RSI, which worries me, because it makes me think we have to do another dump. We've got OBV, which also made a lower low, so that doesn't make me very happy either. Now we've got these W's coming in right here, but they're in the face of an M, so it's not that strong of a signal. For example, we had this little W come in here, down, up, down, breakout. So we broke out there, but because it just rejected it right there, and it didn't close above, then that doesn't count for me, because it doesn't feel like it's actually broken out. If you look really closely, you can see that this wick right here, which is where you have to break, it wasn't actually broken by a candle body. It tried to break it, and then it came straight back down. So this leads me to believe that we are still in a downtrend, and we could still explore lower and lower and lower and lower. But I'm hopeful, because on the 4 hour, there were closes above this this neckline, and you can see these two bars sort of well, this one closed below and this one closed above. So again, it's still not very exciting. The only reason this is exciting is because a long position here, or a long position anywhere in here, let's say here, you've got a very small amount of risk. And remember, our targets are usually a 50% retracement of the range. So our target's 50% retracement of the range, or 50% retracement of this range. Either way, we've got a 2-to-1 risk reward or a 7-to-1 risk reward. So this is a potential trade that is very, very powerful. But what I would suggest, if you want to take this trade, is drill down to lower time frames. Let's say the hourly, and you would take a range either here or here, in the bottom, this area right here. So there's a few areas, right? The 32s you can see we're battling around right now. So this is called your first stop. So if we put in W's here and we break it above, then I think it's got more upside. If we put in M's here and break down, then I think it's got more downside, either visiting the 50% level and the 61.8 they collide, and the 70.02 and the 61.8. I think this is probably the most likely. So what happens is now, let's say we break down, we come and we hit the 61.8, we consolidate here, and then we put more bullish patterns, and we break out. We then retest and we break out. This would be a very bullish scenario because of the location we're in. As you can see, that would look very, very nice. It would paint a big W here, right, with the breakout being here, and the first stop at 38.2, so we'd battle around here a little bit, hopefully going up to the 50% level, right? So that would be your first risk window. So that's why I'm excited about Ethereum. It's definitely too late to be shorting. We're way too close to the bottom for you to be thinking about shorting Ethereum down here, unless you're a shark trader. You're doing extreme day trades. For example, if you took this trade, there's some 15-minute setups that came in right here. Let's see, we've got this divergence that came in right here. There's a divergence that's right here, and it dropped down. So that's there, and it dropped down. So that could have been a potential short. But again, these are very small short windows because we're so low down in the bigger picture. We're so low down to the bottoms that the risk window is just so low down here. So for example, if you put a short position down here, and you said your target was, let me fix this. You said your target was down here, down maybe by this big wick, and your risk window is, up here. So it's like you're backwards. You got way too much risk and not enough reward. So it's just not worth it. So that's my thoughts in the morning for Ethereum and Bitcoin, the two ones that I'm looking at. Again, Bitcoin still seeming bearish, but if it can put in bullish setup here, then that's great. Ethereum still looking bearish, but if it could put it bullish setup, then it's in even a better location than Bitcoin is at the moment. Because again, Bitcoin has a lot more downside. Look at Bitcoin's weekly W is way down here, right? So remember, Ethereum, we're right on the weekly W, but Bitcoin, we could have to come back down here to actually get down to that weekly W level, which is down around 4,000 or 5,000, which a lot of people are calling for. So we'll see what happens, but at the moment we're still in no man's land, and the only trades I'm taking are bearish on Bitcoin. So let me show you what those trades are at the moment. So there's this, let me show you the bearish divergence that came in. So this price made a higher high. This price made a lower low right here, and it confirmed around here. So what I did was I drew from the top to the bottom because I waited for it to confirm. So that was here, that's already confirmed, but I'm not just going to get in randomly. I'm going to wait for a retest. So here's the 61.8 retest and the 70.02. So I had trades at 61.8 and 70.02, and this was my risk window, so I was shorting, so my risk window was to the top of this range, and my target was a 50% retracement down to here. So I've already exited part of my position, and I will exit another part of my position here because I could potentially see it coming down all the way down to here, which is where I want to start hunting long setups because this is a long area. Okay, so that's what I'm doing at the moment. Again, if it dumps below those areas, then I'm still in that short position and I'll see what happens, and it could potentially go all the way down to 5,000, which would be great. Cheaper Bitcoin is better for everyone. Okay, so that's it for the morning video, and I will check this out in the evening and see if anything's played out.